Hi there, welcome to Markets Tomorrow right here on ET9 Mumbai News Centre. I'm Tanveer Gill, and really the market was a bit iffy in the session today. We came off from the highs close to about 160 points for the Nifty, more than 450 points for the Sensex, closing at the lowest point of the session, and losses were more exaggerated for the broader markets. We'll talk about today's day of trade with Ian Huey of JP Morgan, Global Market Strategist there, Tushar Mahajan, Head of Derivatives at Nomura, India. Mayuresh Joshi, Fund Manager at Angel Broking, will talk about his investment ideas. Kunal Bothra will help our viewers with trading calls for tomorrow morning. All right, talk about the session today, and really it was about the index closing above, or actually around the 70-50 mark in the session. As you can see, pretty much at the low point of trade. So the top stories were really about the market losing momentum after that big run-up in yesterday's session, losing more than 100 points on the index. And the top stories will just come up for you on your screens. The Nifty shut shop pretty much at the day's lows. 43 out of the 50 Nifty stocks ended the day in the red. So that's the kind of weak market breadth underlining the tone of the market. A complete U-turn from what we witnessed in yesterday's session. SBI, Bank of Baroda were the top Nifty laggards. So the gainers yesterday reversed the gains and saw some significant losses in the session today. Of course, SBI is the stock of the session. We'll tell you why. But really, it was about the mid-cap index underperforming, down more than 3% from the day's highs. And for the Bank Nifty as well, we saw the index tanking more than 400 points from the day's highs. 9 out of the 12 Nifty bank constituents closed the day in the red. So the question that we are asking is, will sell-off resume on output freeze at the oil meet? The OPEC oil meet decided to not cut output just as yet. That may be in the steps to follow. But for now, they have frozen output to January 11th levels. However, as we spoke to experts, that's not so consoling to the market and does not give a bullish sign on crude. Max, it gives some assurance that, oil producers, the OPEC particularly, is thinking about, cutting oil output in the coming months if the case worsens on crude oil prices. But that's a key question because the markets were disappointed that there was no output cut announced, and which is why most markets reversed gains. Mayuresh Joshi as well as Kunal Bothra, good evening to both of you. Let's start off with that very topic, Mayuresh. Do you think that the disappointment will extend out to another day of losses? So what started off as a big bang week would perhaps end as a damn squib come Friday?
Evening, Tanveer. Clearly, I think the softness in the markets is expected to continue on multiple counts. You're talking about what happens on the global markets with respect to crude. And yes, I think the kind of cuts or the freezing of limits in January, I think you've seen some amount of reversal happening there. But again, I think you're having question marks raised on how global demand is shaping up, specifically with US data coming through. And again, domestically, earnings have not been great for Q3, not expected to recover in Q4 as well. The capex cycle is delayed, and what happens in the budget is going to be a key trigger point for the market. So at least till the budget, my entire thesis of all these factors playing as an overhang on the markets would continue. And clearly, I think the softness in the markets would continue as we will mirror global markets from a short to medium term perspective.
Okay, fair enough. But, the epicenter of the problem really, Mayuresh, has been banks. And in today's session, it was really about PSU banks again. In fact, on that note, I just want to quickly bring in Poonam's perspective. SBI was a stock story of the session. Kunal Bothra also joins into the discussions. We'll get a quick perspective technically from him. But I have to highlight what happened with the Bank Nifty, what happened with PSU banks, and particularly, Poonam, what happened with the SBI. Q4 bad loan concerns remain.
Well, after a strong rally that we saw in the banking stocks in yesterday's trade, we're again seeing a sea of red back into the banking stocks. And it all started with SBI chairman stating that they do see the NPAs rising back in Q4, as well as that may hit profits. And they would actually see how they would deal with the NPA situation post-March. This clearly states that there is still significant amount of NPA stress in SBI Bank itself. I do remember management stating even during the Q3 results that they may see Q4 may see similar kind of NPA stress coming in as we saw in Q3. And mind you, in Q3, while the profits were just around the 1,100 crore mark, the provisions in fact rose by over 7,000 crore. We did see the overall GNPAs rising as high as 28%. So there is a still significant possibility that we still see a very high rise in the NPAs, and that may lead to some impact on the profitability. And that led to the entire PSU bank space again come down back in the red. We did see SBI, Bank of Baroda, PNB, Canara Bank, Bank of India, all the top PSU banking stocks back in the red. Although there are some near-term triggers that may lead to the stock back in the green, which is a government capital infusion into the PSU banking space and also reforms in the banking sector. From a fundamental perspective, still the entire banking space will still be impacted because of the rise in the NPA stress, and hence most of the analysts stay away from the banking space, at least from a fundamental perspective. It is only from a very near-term perspective, from trading perspective, that we may see some amount of green back into the banking stocks.
Okay, Poonam, thanks for that. In fact, hear it out from SBI Chairman Ms. Arundhati Bhattacharya that she pretty much prepared the market with what was in the offing for Q4 in terms of asset quality at SBI.
जो प्रेस कॉन्फ्रेंस हुई थी क्वार्टरली रिजल्ट के समय, मैं वही कहूँगी कि इस बार इस क्वार्टर में जैसे आप लोग देखे हैं कि प्रॉफिट्स पे असर पड़ा है, एनपीएस बढ़ा है, नेक्स्ट क्वार्टर भी इसी तरह से एनपीएस और कुछ बढ़ेंगे, प्रॉफिट्स पे भी कुछ ना कुछ असर रहेगा, लेकिन आगे चल के फिर देखना पड़ेगा कि हम लोग कैसे इस जो सिचुएशन है इसको हम लोग ठीक करें.
Okay, Kunal, welcome to the show, and just wanted to get a quick perspective from you on the banking space before we get a view on the index, and SBI in particular. SBI, Bank of Baroda, PSB, Punjab National Bank, were pretty much at the bottom of the heap today, dragging the markets lower.
Yes, I mean, I think this is probably an extension to the kind of carnage which we've already seen in the last 1.5 months, and the markets are telling one thing very clearly, that these PSU names, PSU banks, which have been beaten down significantly, they are likely to see more pain. I think except for Bank of Baroda, which witnessed a very good move yesterday and today, probably a mild correction in the scheme of things, but SBI almost now nearing its previous low. So I sense that you have to be very selective, at least in this space, and probably Bank of Baroda could probably be a better stock one could actually look at if you're looking at some sort of a contrarian buying. But I think SBI, PNB, and many of these other small cap banking names as well, I think they're looking extremely weak on charts yet again.
Okay, and what's the call on the index right now?
Well, I think in terms of Nifty, Tanvi, 2 days back when the markets opened, with a slight gap up, and then the gap up extended throughout the day. This level of 7034 on Nifty spot has apparently not been filled. So I think if tomorrow or day after, if we don't fill that gap, and assuming the market say opens in slightly flattish up and probably extends the gains over the next couple of days, I would take it as a positive sign. Probably not looking at shorting Nifty at that point, because 7034 now remains to be a good short-term support from a spot Nifty spot level per se. One of the other aspects which has now turned, I think if you look at the last 1.5 months, the charts of crude are now indicating some sort of an RSI divergence, and the recent fall which you've seen on crude, where the NYMEX hit $25-26 odd dollars, and from there on now the NYMEX is stabilizing around $30. I think there is a very clear RSI divergence seeing on crude. So I sense that now you could probably see a spurt of almost 15-20% in crude over the next couple of weeks, and probably that could add to more bit of short covering to the equities as well. So I sense that rather than being more short or going with the trend, I think it's time to be a bit contrarian at this point of time. Look for these dips which you saw today to probably go contrarian longs in the short term trading perspective.
Okay, fair enough. Mayuresh, do you hold that view too? Because in that case, you would have ONGC, Ken, Reliance Industries for that matter, seeming like opportunities to buy into right now.
No, clearly I think the opportunities in terms of valuations might still exist for a lot of these stocks, specifically in the upstream names, as you mentioned right now. But again, I think the uncertainty related to how crude might behave from a short to medium term perspective is a big uncertainty that the market faces. Having said that, probably I think if you look at realizations across the upstream companies, specifically ONGC, Oil India, you've actually seen tepid realization comes through as the crude has fallen over the last few quarters. So clearly I think the pain in the balance sheet would continue. In fact, for ONGC, its overseas arms might see significant hit being taken on its individual P&L. So clearly I think you have to be extremely selective in these markets, whether it's upstream, downstream. I think just fall or the volatility in crude prices is not something that you'll be playing from a medium-term perspective. You probably need consistency. So from a trading perspective, I think there might be some bets which can be open from the upstream or a downstream kind of a play. But from a fundamental perspective, our belief is that you should be extremely stock specific in this space. And again, one really needs to have an outlook of more than 2 years if you're willing to take a bet on this space itself.
Okay, I also wanted to talk about the IT space, because given what's happening in the market, this sector has, despite its weightage, has gone a bit off the radar. Technically, is there an opportunity, Kunal, of trade in the IT sector, especially the large caps? And if so, where?
Yes. Yes, I sense that there's probably a contrarian approach, yet again in the IT space. I think Infosys is holding up, about the 200-day moving average pretty well. Over the last 3 or 4 months, you've seen a good base for Infosys around the 1040 mark, and now you have the larger term trend for Infosys also being positive. So I think there are a lot of pluses for Infosys as well, and I sense that this 200-day moving average for Infosys, which is where it's currently trading, I think should probably be a good support for the stock. Even for TCS, I sense that it's probably showing some good contrarian signals from a short-term perspective, and you could probably see of 4 or 5%. So I believe a 2350, 2340 could be a possible target for TCS as well. So I think if you be very selective in the IT spaces, I think TCS and probably Infosys could probably be a good contra buy.
Okay, Chairman, stay on with us. We'll head into a short break. When we come back, we're going to be discussing on what to watch out for in tomorrow's session for the market. But for now, as we take that break, here are some more market opinion.
Technically, we are in a bear market, right? Because when you correct, what the definition of the bear market is 20% of the highs, and we are definitely like more than 20% of the highs which we made about a year ago in March. The pace of domestic savings into mutual funds, and if that begins to slow down, I won't rule out a 6400 mark as well. My inherent faith in the Indian economy is not shaken yet. But from a trading standpoint, it's very difficult to find pockets to buy. It is really a market which is sell on rallies, the bankruptcy law and all of that. I think those could be big triggers for the market, but it's not pricing that the passage of that yet. So at this point, as we talk, the public sector banks are clearly a sell on rallies kind of stage.
I think there is definitely some worry that the central banks are running out of actions or ammunition in their pocket, as it were. So there could be a worry that, yes, what they're doing won't be enough. If they do roll out more, it could be considered bad news or good news, depending on how the market is stabilizing or how the market reacts. I think for the moment, the market is still probably thinking that it's good news that there's still more help from central banks, more action being rolled out. But yes, there is the concern that there will eventually be the eventual scenario where that they do believe that nothing seems to be working, that the central banks are running out of options.
Welcome back to Markets Tomorrow right here on ET Now. Let's quickly go across and get a sense of what to watch out for in tomorrow's session. Pranay joins in with a list of cues.
Well, on the macro side, there aren't many things to watch. Amongst the key, though, will be the meeting of Energy Minister of Venezuela with that of Iran and Tehran as a follow-up of what we've seen today. From US, you will have the industrial production number for the month of Jan, which analysts are expecting to show a growth of about 0.4% versus a similar contraction that was seen in December. Also, The housing starts are expected to show a growth of about 2% according to the Bloomberg consensus estimate on a sequential basis. From UK, you will have the unemployment number, which is expected to show 5%, relatively steady from the 5.1% we had seen a month ago. Lastly, from India, the corporate development could come in from Dr. Reddys, where the board is meeting tomorrow to consider buyback. The company has cash of about 3,800 crore rupees, but if you take the debt as well, which is about 3,400 crores, so the net cash position will be close to about 450 crore rupees. So the stock has retreated to about 1.5-year lows and is available at the same level as seen in September 2014. So these are the important things to watch tomorrow.
Thanks, Pranay, for that. Mayuresh, come in on that impending buyback from Dr. Reddys, which is often seen as a sign of confidence that the management has in their own business, purchasing or buying back shares from the market. And you've seen that in the pharma space through the world in 2015. Would you think that this trend would pick up locally as well? A lot of pharma companies buying back their stake?
Not sure about that one, but specifically with Dr. Reddys, again, I think you have to take into account what they're probably delivering in terms of numbers and what the expectations are going forward as well. So clearly, I think what you're talking about in terms of their PSAI business, the concerns related to devaluation of the Russian ruble and again calibrated sales that you've probably seen in Venezuela and Latin America, that has definitely played against the company in terms of how the top line and the volume growth has been. Whether that would continue, that might probably continue into the quarter to come as well and the quarter after that as well. So clearly, I think you're probably looking at top line remaining a little bit sluggish. So I think the positive signs that remain is the NDA pipeline, which Dr. Reddys have got. And again, I think the domestic formulations business has held up pretty well. So again, I think it's contracted quite sharply from its recent highs. But again, my own take is that the stock might consolidate around these levels at least for some length of time, though I think the valuations have become attractive. But then again, I think the next quarter's results would give us more clarity in terms of how the FDA resolution is shaping up and how the different business verticals, including PSAI, are basically firming up.
Okay, Kunal, on Dr. Reddys and some of the pharma charts, which are also, not so much on the radar given the market sell-off. What would be your preferred bet there?
Well, it's difficult to really pick, names from the pharma stocks, because, of the kind of carnage you've seen, especially for Dr. Reddy. I think the last 2 months has been, the stock has been consolidating, but there are some very important resistances closer to 3,200, 3,300 on Dr. Reddy, which it really needs to break, or that level has to be taken out, because those are some serious gaps with the stock opened lower, and it's not managed to sustain or break that particular band. So I sense that this period of consolidation which you're seeing on Dr. Reddy could probably even see further selling happening if we don't break 3,200. So I sense any long move or any buying which one is really looking at for Dr. Reddy, especially from a longer term perspective, has to be only about that level. For the other pharma stocks, especially Aurobindo Pharma, etc., I think a lot of these pharma names have broken down their crucial supports. Some of them have also broken their longer term moving averages as well. So I would probably not advise looking at the short term charts of a content buy in this space at this point of time.
Okay, Adani Ports was active in the session today. Kunal, a quick run through on the charts there. Up 5%, top gainer, going past 200, but just marginally so.
Yes, and I sense that one very important resistance which the stock has to break is 210. I think if it happens to break this could probably we could see a reversal of almost 1.5 or 2 months for the stock, and then the upside gaps open up. So I think till the time we don't see a breakout of 210, these rallies could probably be sold into. The volumes over the last 2 or 3 trading sessions have been good, so that's one very good comforting factor for anyone who's looking to go long. But as I said, I think one of the most important resistance which I would be looking at would be 210. If the stock manages to close or even break that on an intraday perspective, I think I would take that as a breakout signal for Adani Ports.
Mayuresh, anything from the infrastructure space that is looking compelling to you? I mean, we spoke to the management of Lloyd earlier today on that big order win from the Middle East. Any such low-hanging fruits?
No, clearly I think one really needs to be selective in this space as well, Tanveer. And clearly if you look at the stickiness or the lumpiness that is probably coming through in terms of fresh orders, couple that up with whatever execution is happening on the existing order book. So you're looking at order books largely for the universe remaining extremely tepid. And again, order wins have been largely muted, if I may put it that way. So clearly I think one needs to have a sector by sector or a company by company analysis within infrastructure stroke construction stroke defense. So clearly as a theme, we're liking EPC again, what we've been hearing from the roads minister. I think a lot more can come through in terms of order wins over the next few quarters, and that really augurs well for a lot of these EPC guys. So I think the EPC guys having leaner balance sheets, lesser leverage on their books with better execution capacities is something that I'll watch out for. So clearly I think EPC as a theme is something that I'll play out for the greater part of FY16.
Okay, Mayuresh, before we wrap up, your top investment ideas, top 3 investment ideas at this point?
So clearly I think one really needs to take a very conscious approach to these markets. The markets are going to be extremely volatile, so any fresh exposure has to be taken in the tune of around 10 to 15% of the investable corpus. With that caveat, probably I think what's looking good probably within the cement space, I think Ultratech Cement is something that we are liking in terms of demand recovery, utilization remaining extremely stable. With the kind of presence they've got across the country, we expect volume growth to be much sharper over the next few quarters with the government's thrust on infrastructure and housing. So Ultratech within the large cap becomes one of our favorite picks. Bharat Electronics with a specific focus that the government has probably on the defense spends. Bharat Electronics has probably got a very clean balance sheet in terms of net cash on its books. Return on equity, return on capital employed are quite high with the kind of ornaments expected over the next 2 years. We're expecting a 12.5% top line growth, a 13.5% EBITDA growth to happen on that front. And clearly I think within the NBFC space, LIC Housing is corrected very, very meaningfully. In my opinion, I think the numbers were extremely good. Asset quality pressures were minimal to this extent. And clearly if you're looking at retail advances remaining extremely stable over the next few quarters, our own take is that valuations are looking extremely attractive for LIC Housing Finance from a price to book perspective. So LIC Housing Finance will also remain one of our preferred picks in this sector.
Fair enough. And Kunal, come to you for your trading ideas to help viewers in the session.
Well, yes, I think the first one is a buy on TCS. As I clearly mentioned, Tanvi, that the stock is looking fairly attractive from a short-term trading chart perspective. It's showing some good contrarian signals. The stock can probably start a short-term uptrend. I would look at 2340 as a near-term target on TCS, keeping a stop loss of 20 to 30. And the second one is a sell on SRF. I think the stock in the last half an hour or so, it managed to make a fresh swing low. This could probably be a 2-week low for SRF, and if it opens gap down tomorrow, say closer to 1080 odd levels, I would take that as a good shorting opportunity for the stock. I would keep a stop loss of 1105 and a target as much as 1020 on SRF.
Okay, gentlemen, we'll leave it at that. Thanks very much, Kunal, as well as Mayuresh, for making sense of the markets for our viewers and helping them with ideas to benefit from trade in tomorrow's session. That's it. That's time out on markets tomorrow. Catch you with the markets as always tomorrow morning at 8 a.m. Until then, take care.